Income taxes are paid by working people through a process called tax withholding. This process involves the money being taken out of an individual's paycheck before they receive it. The amount of money withheld from an individual's paycheck for income taxes is determined by their income and the tax bracket they fall under. The tax bracket is determined by the amount of income an individual earns in a year. The United States has a progressive tax system, which means that the more money an individual earns, the higher the tax rate they will pay. The tax bracket is determined by the individual's filing status, which can be single, married filing jointly, married filing separately, or head of household. Each filing status has its own set of tax brackets and corresponding tax rates. For example, in 2021, for a single individual, if their taxable income is below $9,950, they fall under the 10% tax bracket, which means they will pay 10% of their taxable income in taxes. If their taxable income is between $9,951 and $40,525, they fall under the 12% tax bracket, and so on. Head of household is a tax filing status that is available to individuals who are unmarried and provide a home for a qualifying person, such as a child or dependent. To qualify for this filing status, the individual must meet certain criteria, including they must be unmarried or considered unmarried on the last day of the tax year. They must have paid more than half of the cost of maintaining a home for the tax year. They must have a qualifying person living with them for more than half of the tax year. If an individual qualifies as the head of household, they may be eligible for a lower tax rate and a higher standard deduction than the single filing status. This can result in a lower overall tax liability. For example, in 2021, if an individual files as head of household and has a taxable income of $25,000, they fall under the 12% tax bracket, which means they will pay 12% of their taxable income in taxes. On the other hand, if they file as single and has the same taxable income of $25,000, they will fall under the 22% tax bracket, which means they will pay 22% of their taxable income in taxes. To claim the head of household filing status, the individual must file Form 1040 or Form 1040 SR and check the box for head of household on the first page of the form. They will also need to provide information about their dependent, such as their name and social security number, on the form. It's important to note that the head of household status is only for tax filing purpose. It does not change the legal status of the person or their relationship with the dependent. It's also important to consult a tax professional like Compro Tax 281, 592, or 223 to ensure that the head of household status is claimed correctly and that taxes are filed correctly and on time. The tax rate also varies based on the type of income. For example, some income is taxed at a different rate than the regular income, such as capital gains and dividends. The individual's employer uses the information provided on the employee's W-4 form, which includes their filing status and the number of allowances they claim, to determine the amount of money to withhold from their paycheck for taxes. This information is then used to calculate the employee's withholding tax using the IRS's Publication 15T Employer's Tax Guide. In summary, the amount of money withheld for income taxes is determined by the individual's income and tax bracket, which is based on their filing status and the tax rate for their income type. The individual's employer is responsible for withholding the appropriate amount of money and sending it to the government on behalf of the employee. In addition to tax withholding, working people may also need to pay taxes on any additional income they earn, such as from freelance work or investments. This is typically done by filing an annual tax return, which is a form that reports the individual's income and deductions for the year. Based on this information, the government calculates the amount of taxes owed, and the individual must pay the balance. It's important to note that taxes are progressive, which means that the more money an individual earns, the higher the percentage of taxes they pay. Additionally, there are various deductions and credits that can be claimed on the tax return, which can lower the amount of taxes owed. Furthermore, taxes are also collected on state, local and city level. It varies depending on the jurisdiction and laws. Finally, it's important to keep good records and stay organized to ensure that all income is reported and all deductions are claimed. It's also a good idea to consult a tax professional like Compro Tax at 281, 592, or 223 to ensure that taxes are filed correctly and on time. Like, subscribe, hit the notification button.